Hey everybody, it's Brian Shannon from alphatrends.net. Today is Friday, the 16th of August. Hope you had a good week in the markets. They certainly experienced a very strong bounce and led by the semiconductors. Once again, they lead up and down. They were up 10% this week. NASDAQ up 5.5%, S&P 4%. The only thing that lost any ground was oil and Bitcoin. We will talk about the Bitcoin chart because it was a nice comeback in there today. Let's start out, as we always do, with the S&P 500. That blue line down here is the year-to-date anchor. And as I mentioned back there, when it hit there, I don't remember if I did in this free video or it definitely did for subscribers to say, we'll probably look back on this and say, wow, we should have, could have, would have bought there at that year-to-date anchor. I did not buy and hold in there. I did some trading around it, but I didn't expect it to hold initially. As if you recall, I was hoping that we could see a rally that, kind of failed and then came down, undercut that low, and then continued back up. Instead, we had that move back above the 5-day moving average, and we had those higher highs and higher lows above the rising 5-day moving average. So I've been bullish this whole time, but very cautiously. We've gone past the anchor from the all-time high on the S&P 500. That was a potential level of supply where no supply was released, so it was not resistance. The 61.8% retracement was a level of interest on the upside that had the potential to become resistance. But guess what? The market simply didn't care. It continued to move higher. So here we are right back up at the highs for the month. We did break above that previous high here on August 1st today. So maybe this is where we start to slow down, but I will remind you, I always have a bullish bias where we are above a rising 5-day moving average. I might scalp on the short side, but I'm certainly not going to swing trade. You've got to know which time frame that you're looking at. And again, we're extended here, but it doesn't mean it can't continue to move higher. We've gone from 510 to 550. That's 40 points, 8% or so. That's a big move. Maybe we need to digest and come down. Ideally, what I'd like to see, as I always point out, the market doesn't care. What I want to see is this. Maybe we create an inverted head and shoulders pattern, come down, make a higher low, and then you would want to be a buyer for a bigger move somewhere over in here with a stop under there. That's thinking too far ahead right now. Let's just look at it and say we need to be a little bit cautious overall for the S&P 500. And the NASDAQ, we're right up just beyond that 61.8% retracement. We're at the 50-day moving average, the blue line in there. We're at this prior band of support. We still see that this rally is occurring on lighter volume compared to what it went down on. But as always, only price pays. Forget about volume, really. The relationship is it came down on big volume, peaked at the bottom, and then has been rallying on light volume. It doesn't mean anything. If you're long the Qs, it means you're making money. You don't make more money or less money because of what the volume is doing. It's a reason to look at it and say, hey, maybe I need to be cautious as we're getting extended. It's just another reason, just like, this prior high is another reason to look at it and say, we're getting extended. We just broke that high. Is that educated money that buys that so-called breakout past here after missing this move from 422 to 475? I don't think it's likely the smartest money out there. The Russell 2000, I continue to believe it's likely a waste of time. We had a brutal failure of this market. It's likely we'll find supply up in here that's strong enough to become, to overwhelm the demand and become resistance. It's a potential level of resistance. Support broken tends to act as resistance. But as we saw with the financial stocks, for instance, a great example, this market I was looking at and saying, hey, there's a potential level of supply. It might become resistance. Other people were saying, oh, there's strong resistance there. You don't know resistance until after the fact. I've been saying that for the last 25 years. It's after the fact. If it had pulled back, then everyone who said it was resistance could have said, hey, I was right, see? But it didn't do that. Instead, it continued to move higher. This market has defied every level of upside where there were supposed to be sellers. So if you sell where you think there are supposed to be sellers, you're not basing it on what is actually happening. You have to base it on what is the market telling you. If the market is telling you the buyers have taken back control aggressively and they're not making it easy for people to get back involved, That is from a low risk standpoint. The semiconductors right up close to the previous high here from late last month, and this band of prior support in here, which has the potential to become resistance just overhead as well. So that's at 257 level. Where does this market find resistance? I have no idea. It's not my job to try to figure that out. I look at levels of interest along the way, and then I say, okay, now where are we? We're above a rising 5-day moving average, and what's the pattern? The pattern is higher highs and higher lows. If we break that pattern and create a, let's say we create a lower low and then a lower high, well, then that reverses. And then this in here is where we would turn cautious, because we would be making a lower low, but still above a rising 5-day moving average. So instead, I would become bearish for the intermediate term if we broke down below the 5-day moving average and the 5-day moving average was declining. For now, these are just levels of interest. You've got to be careful buying up in here because of the velocity of which we've come up to this level. Biotechs are behaving well. This was also supposed to be, this prior support was supposed to be resistance. Instead, we're battling through it. We're holding above the anchor from this high today. We're above a rising 5-day moving average. I'd love to see in these markets maybe a quick flush out and then recovery. Then we could really pave the way for further upside. We still need, I think, a higher low in these markets to have the real confidence to get involved. Or it's just going to continue to be a lockout rally and make it difficult for people. And you've got to decide for yourself, where does it take too much risk for you? For me, we're in day trade zone on these indexes. I've said that for the last week or so, and I'm okay with that because we are definitely extended, and that's my style of trading. It doesn't have to be your style. I'm not trying to convince anyone what they should do. I'm merely laying out what I believe are is an objective look at the market. This XLE, the energy names, they were supposed to find supply which was strong enough to offset the demand and then become resistance. We just jumped above it today. So if you look at the daily time frame, though, we've still got just a giant mess here. Is there an advantage trading this market versus another market? And that's the way I always look at it. It's not just, hey, is this market the best one, or how is it in relation to the other markets? I'm not necessarily looking at relative strength, though at the end of the day, I guess that's what it is. What I'm really looking for is absolute strength and low risk, high profit potential. TLT, in my mind, does not fit the low risk portion of that because we have these daily gaps. And this is a little tool that I created in TradingView, which shows you the average true range each day, average daily range versus the average true range. So that includes the gaps. The average daily range is the difference between the high and low. The average true range is based off the prior day's close. So you see here that it's 0.8, meaning you experience 20% of the typical trading in the TLT outside of market orders. That's what these gaps are. And when you see that you can't control 20% of the risk is the way I look at it, which is why I don't like to trade it. Looking objectively at this chart, it seems as though we've just made a higher low right here, and it's ready to make an assault on this high. Probably runs up into that level, finds a little bit of supply, runs up and hits the anchor from this peak. And who knows after that? The buyers are in control of the bond market right now. Let's take a quick look at Bitcoin. What did I do with my chart? There it is. So on the daily time frame, let's just focus on the daily time frame first. We'll talk about that 4-hour in a moment. We can see that, the anchor from this prior low down here where this move began, that was prior to the, when the Bitcoin news first, what am I trying to say, ETF first kind of really came out, was down there. That's where we found buyers recently. And unfortunately, on the upside, this is the year-to-date anchored volume weighted average price, the black one. And we're still kind of battling with that. it's been support and resistance in here recently. The anchor from the prior low over here is still overhead. We haven't been able to get above that. Or from the low earlier this year, we're still stuck below that, and from this peak and the all-time high peak. So it's still kind of in no man's land in here. And if you really look at the bigger picture, you could probably make an argument that this high right here was higher than that high, and this low was lower than this low. That's a pattern of lower highs and lower lows. Now, maybe this is going to be the higher low and it can push higher. Let's take a look at the intraday action. Now, similar to what we've been looking at in the equity ETFs, this was the big sell-off that we just recently had from 70,000 down to 49 and change. This market retraced almost exactly 61.8% and found supply. So we were looking at the NASDAQ, we were looking at S&P saying maybe that retracement is going to be resistance. And this is why, because sometimes it does, like it did here for Bitcoin on the 4-hour chart. And then we've got a lower high, and we came down. And yesterday, this was a reason for concern. I thought if we get stuck below this, the anchor from the low, then we're going to head lower. It's nice to see that it survived that. It's back above the 5-day moving average, but we're realistically kind of in no man's land here. So for me, I think it's best to just leave Bitcoin alone at this time.